And so this is the graph that I found on the BBC that basically tells us about inflation, and that is what they are expecting to see, not the US. The US, for some reason, they don't show anything that with this much of a detail, which is very interesting. They don't want to spook the market. Hi everyone, Marco here. So the stock market seems to be going down for two reasons. Well, if you already subscribe to this channel, you know that already. But the two reasons are, the first one is high interest rates coming up, and the second one is obviously the Rona. Now, there is a new article that just came out and seems to be actually throwing a big spanner in the works and make it look like the Rona might actually help with not having high interest rates. Let me show you. And this is the article. By the way, this is the Bank of England, okay? This is not the Fed, but you know, the Bank of England, all central banks work in the same exact fashion, more or less. So they basically copy each other type of thing. So Bank of England hawk Sanders say he might pause on rate hike vote due to, you know, Rona. And this is the reason. So if you scroll down, the obvious reason is that Sanders say the Rona might slow Britain's economy. And let me put that in perspective for you. So the reason why is because when you have like a lockdown, because that's what we're talking about here, if there is a slowdown of the economy, it means that we're going into a lockdown. And so if the economy goes into a lockdown, it means also we're gonna have a slower money velocity, which is what we had, by the way, in 2020, and why we didn't have inflation back then, because obviously no one was going out and they were not spending much money, just staying indoors and doing things like that. Now, moving forward, the reason why this could be actually very good is because that would delay and the idea of having high interest rates. Delaying for how long? That is the real question. And sadly, it's not a question that I can answer. Nobody can, to be honest. And if you want to stay up to date and want to hear the latest news on the stock market, the crypto market, I look at the whole market and particular stocks, well, this is the channel, so subscribe. Now, what is gonna happen then? Even in this case, so with lower interest rates going forward, without having the massive hike that they are looking at, well, there is obviously a number of strategies we can have. We obviously need to remember that one of the things that really may happen, and it's probably gonna happen, is that the money, if we don't have these high interest rates, will go back from bonds, that is where the money is going now, from bonds into stocks and crypto. Again, these are the two risk-on assets that at the moment are being beaten up because of this fear of high interest rates. And I'm pretty sure that the money will actually flow into very safe stocks. Yes, I said it, very safe. So what about a list? Obviously you want a list. Well, you want Tesla, you want the Google, you want the big tech stocks, because these are very safe plays. They are making a lot of money. By the way, even Apple, if you want. So these are companies that with the revenues booming and with no risk of default because they're doing so well. They have a monopoly as well. Like obviously Tesla is selling loads of electric vehicles. Apple has got their own massive brand making an awful lot of money. And then Google, obviously it's the first and only search browser, and so you understand that these are companies that cannot be replaced. Now, if you're looking at, for example, Facebook, they do have a few issues. So hold off for the moment, and I'm gonna make a video update when I'm having more news about Facebook, because obviously the whole metaverse could turn into nothing. But yeah, moving forward, so what is the best strategy, you know, to get through this period of absurd uncertainty? Well, the easy thing is that if you invest for the long run, and I'm talking about 5 years, well, it's very simple. The stock market will definitely be higher in 5 years. And I'm not the only one who's saying that. I can show you data that proves that interest rates will be lower in 5 years. That's the deal. And so this is the graph that I found on the BBC that basically tells us about inflation. And that is what they are expecting to see. Very important, again, BBC, so we are looking at the UK, not the US. The US, for some reason, they don't show anything that with this much of a detail, which is very interesting. They don't want to spook the market, but here in the UK, we are very much on the ball and clear about what is going to happen. So inflation expected to peak at 5% next April. And that is based, obviously, that was pre-Omicron. Oh my God, they said it. Anyway, we'll see what happens with the algorithm. So this is what is expected, but as you can see, we are gonna have probably the highest level of inflation in April 2022, but it's not just gonna go plummet down at the speed of light. It will take some time, and that's why I'm saying that 5 years, investing 5 years from today is probably the safest play. But if instead you want to actually make money in 2022, well, there are actually a number of strategies you can obviously use, but what is very important is that in the very short term, the market is in deep trouble. We can see a lot of volatility that we didn't see in the past years, and on top of that, it could be something that could last, like I said, for a few years, where we see inflation keep going up, the Fed and all the other central banks increasing interest rates. So I'm not suggesting to buy for the short term. What you could do instead is to look for alternative ways to make money. I'm actually looking at alternative ways to make money myself. And if you have enough capital, obviously what you could do is to buy into real estate, because obviously that is a very safe way to make money in the long run, especially because it produces a lot of cash flow, a lot of rent into your bank account. But if you don't have that kind of money, I am actually looking at building my very own crypto trading algorithm. Yes, it's gonna be just for DeFi. It's a bit of a project I'm working on, and it's gonna be released to my Patreons first. So if you want to become part of my Patreons, it's just $3 a month, and it's obviously £2 if you live in the UK. So first link in the description below, and if you want to have access to that, and if I succeed in doing that, which is the real deal, but yeah, you're gonna be able to use that. Last piece of advice, very, very important, to look at the Fed balance sheet. They said they're gonna do the tapering. At the time of recording, the taper doesn't seem to have done too much to their balance sheet. It seems to be still going up. And you know that the Fed, if you've been subscribed, you know this, but the Fed decides whether the market goes up or down. And so at the time of recording, it doesn't seem like they've done too much, but December have just started, and this is the second month of tapering. So I'm gonna make way more videos on the stock market, the crypto market, and everything to keep you on top of this obviously potential crash, stock market crash, obviously. And so we want to be sure that we do not get caught in, and so we are able to just survive and make as much money as possible. So thank you for watching, subscribe, and I'll see you in my next video. See ya.